The US government has gone further into debt for the last 20 consecutive years or so. Its last surplus was in 2001. I hear a lot about the US is out of the woods and inflation is coming down, but that doesn't mean it can't rear its ugly head again, even worse than last year. Let me explain. Many think there's no chance the US could see hyperinflation, which would inevitably kill the dollar's hegemony and status as a world reserve currency. They think it's sensational, fictitious scenario only applicable to places like Venezuela or Zimbabwe. However, it's definitely possible in America. Let me quickly tell you why. Last year, in fiscal year 2022, the US government paid around $500 billion in interest alone on its debt, up from about $350 billion the prior year. That's a gross amount of money to keep the creditors at bay. Fast forward to today,
the US government is paying more than double the interest rate on some of its debt than it was just 12 to 18 months ago, which means interest payments alone, although still a ways away, are heading in the direction of $1 trillion annually.
$1 trillion in interest. For proper context, the US government collected around 4.3 trillion in tax revenue last year. If it has to make around $1 trillion in interest payments annually,
which is possible within 36 to 48 months if interest rates stay at these levels.
15 to 25% of tax revenue it collects could go to simply making interest payments. Making matters worse, last year the US government spent over $6 trillion funding the country, which means they keep adding to the national debt, which is the taxpayer's burden, and they do it seemingly every year, which means federal government interest payments will continue to go up in this current environment. Right now, the US government spending is equal to about 25% of the national GDP. The more the government spends on interest, the less the impact its spending will have on the economy. It's important to note the US government has gone further into debt for the last 20 consecutive years or so. Its last surplus was in 2001. What happens if there's a recession, like so many economists have predicted, and tax revenue declines? The government will still have to make the interest payments of around, let's say, $750 billion annually. Otherwise, they risk defaulting on that debt and losing all their leverage globally. So what can they do? Increase taxes in a recession? Nope. That would make matters worse and potentially prolong the recession or even trigger a depression. The answer is more US dollars will need to be printed in that scenario. Print money to pay off a growing amount of interest on the national debt. This is a terrible possibility. I believe within 12 months, the Fed is going to have to lower interest rates. Otherwise, there is a plausible scenario that sees hyperinflation in the US, and that would likely lead to a new global reserve currency or some form of it. And that would mean the US would lose its superpower status.